Aussie and the CAD have been weaker than the Euro, which is why this Euro dollar doesn't look quite so aggressive to the short side, but can't argue that it hasn't done a bad job. Now, we've been back here before. We've been here before in this Euro dollar in Jan, Feb this year. All we've done is we've gone up. We've had a huge, great big area consolidation that we have now finally broken from. Remember, the euro dollar makes up 58%. It accounts for 58% of the dollar index. The two are going to look. Similar. Yes, we are, Bruce. Now, this is sort of third in line. It plays sort of third fiddle to the Aussie dollar and the dollar CAD. But we have some pretty good historical levels in and around here. They've been respected very well going back. The euro dollar, right, is very accommodating with the levels, significant levels and structural levels that we have from the daily. They bounce from one significant level to the other when you get down to the 200 tick. It's remarkable. This 137.37, which was a weekly structure back in Q109, is our structural long point from here. So you've got 137.37 and 133.33. These are, if you've been around this methodology for a while and listening to myself, Mike, or whoever, with regard to the euro dollar, those two levels should ring a massive bell for you. 137.37 and 133.33. Okay, they are levels that have been respected time and time again. So the 133.33 is your structural short. Okay, definitely want to be short below that and expect some follow through. On the long side, the structural long is 137.37, and then you've got the 138.36 just above it. So the 137.37 is the very earliest opportunity for for a position to the long side to hold. Fine, you may be a touch more prudent and wait for the 138.36, which would give you an even safer trade to the long side. But here we're making lower lows and lower highs now. This is the direction is down. The price action, the aggressive price action is on the sell side still. So take this into account. Now, I just want, before we go to the 200 tick chart, just see this 134.93. This is the momentum. This is the momentum low, okay, from the initial sell-off, and this is going to be relevant when we consider taking positions on a shorter term basis when we get to 200 ticks. The 134.93. The relevance of this is this momentum low from this sell-off. When we get to 200 tick, it's going to be relevant in a potential trade to the long side, maybe to give us the move back to 137.37. Let's see. So here's 134.93, okay, on the 200 tick. Okay. Right. This is just to get more of the picture in. Okay, Paula, I mean, there's sound should be, if I put it too close, it crackles. I mean, that shouldn't be too bad. Right, so there's the 134.93, which you remember from the daily is the momentum low in the downtrend, and this is slicing right through the middle of this period of congestion now. So this level is causing noise in the market, as we've seen in the Aussie CAD and the dollar CAD, the Aussie dollar, sorry, and the dollar CAD. We had the significant moves. We've had significant moves, and after those significant moves, we're just getting the market pausing and ranging here. That's absolutely what we expect. Market never moves in a straight line. So the 134.93 basically dissects them right through the middle of this period of consolidation. Now, what we want to do is we're going to use that 134.93 as a stop level for our trade to the short side. Now, okay, the red line, the 134.57, is our short point, okay, with a stop at 134.93. That's the very earliest. You'll notice that this short point here is quite aggressive, given that this level here, we should expect more confirmation to the downside. There's going to be more stops being triggered here, and even more being triggered at the one-day low. But okay, our bias is to the downside in this euro dollar. So at the two lows, the momentum low, and then the market coming back to match that same level, is strong enough on a short-term basis, okay, to warrant a short trade there, even if you're just trading the short to the one-day low. Further confirmation is the break of the one-day low to the downside. The only reason we can be slightly more aggressive for an entry on the short side in this euro dollar is because it's in, again, I cannot emphasize this enough, it's in the direction of the trend. So short point, the aggressive short is here, the less aggressive short is here, and the more conservative short is the one-day low. So I'm going to take this 134.57 as the example, and you're going to have your short stop at 134.93. On the long side, okay, you see where we closed Friday, basically bang on the 134.93, just holding there, market size holding it up. A move above this level obviously will be in receipt of the market maintaining the long above 134.93. Be aware this is going counter trend, but that is an acceptable long when the market opens in Turkey, or indeed if you're waiting for the UK session tomorrow, we'll obviously see where that opening range forms, and that's going to give you additional criteria. So that's the long. Your stop, you're taking the long trade, your long stop is going to be 135.20. So it's going to be stop, it'll be too wide for the 134, 134.93 really. I'm going to have our stop below some of the highs made in this sequence. So your long stop is 135.20.